They're not typing Bitcoin price. They're typing Bitcoin zero, right now, in America, at a frequency the data has never recorded before. And that one ugly phrase, 4 letters and a number, has flashed on the screen only a few times in Bitcoin's life. And each time, it showed up when the market was closest to snapping back in the opposite direction. This isn't a candlestick pattern. This isn't a whale wallet screenshot. This isn't an influencer screaming into a microphone. This is public behavior, raw panic, measurable fear. Bitcoin is down hard from the October 2025 peak, more than a 50% drawdown. The chart looks like a slow-motion bleed toward the $60,000 area, and the vibe feels like someone turned the lights off in the room. People aren't asking, "When moon?" anymore. They're asking the darkest question possible. Is it going to zero? I'm your host for this breakdown, and we're going to cut through the noise and go straight to the signal hiding inside the panic. Because the weird part is not that people are scared. The weird part is where they're scared. The United States is melting down right now, while the rest of the world already had its peak fear months ago and has been cooling off ever since. That split matters, a lot. And by the end of this, you'll see why this single divergence can change the way you read this entire market phase. So let's talk about what actually happened. The search term is simple: Bitcoin zero. Not Bitcoin bottom, not Bitcoin forecast, Bitcoin zero. That is not curiosity. That is capitulation trying to form in real time. That is a person staring at a red portfolio and asking Google for permission to panic. And here's the first thing you need to understand before anyone tries to spin this into a clickbait prophecy. Google Trends doesn't give you raw counts. It doesn't say 2 million people searched this. It normalizes interest on a 0 to 100 scale inside a chosen time window. 100 means highest relative interest in that window. 0 means too low to matter. That sounds basic, but it's the difference between using data and abusing data. Now, in February 2026, the United States hits 100 for Bitcoin zero, an all-time high for that term in the US dataset. In plain English, within the available trends history, America has never, ever searched Bitcoin zero more intensely than it is searching it right now. That is a big deal. Not because Google is magic, but because crowds are predictable at emotional extremes. And the crowd is at an extreme. Let's anchor the context. Bitcoin runs up into October 2025, prints that euphoric high above 6 figures, and then the air leaks out. Not a cute 10% pullback, a full gut check. A drawdown deep enough to flip the entire narrative from institutional adoption to, was that the top? Now we're hovering near $60,000, and you can feel the psychology shift. It's not optimism turning into caution. It's belief turning into doubt. Doubt turning into fear. Fear turning into search queries at 2 a.m. But then you zoom out. You look at the exact same term globally, and the global chart tells a different story. Worldwide interest for Bitcoin zero peaks back in August 2025. The world hits 100 there. And after that, the pressure releases. The trend slopes down. By February 2026, global interest is nowhere near that peak. It's closer to the middle of the range. So the world panicked earlier and has been calming down. America panics later and is now setting records. That's not normal. So what does that mean? Either the US is late to the party, and this is a delayed reaction that can still get worse, or this is exactly the kind of localized, concentrated panic that tends to appear when the sell button is being hammered by the last people left to panic. And that's where the history comes in. Because this isn't the first time Bitcoin zero surged when the market felt broken. It's happened before, and the timing was brutal and revealing. Go back to 2021. That year was a masterclass in emotional whiplash. Bitcoin rips upward, shatters old ceilings, and the public treats it like a one-way elevator. Then it collapses, a real collapse, a drop big enough to make the headlines flip overnight from revolution to bubble. Around that mid-2021 drawdown, the Bitcoin zero fear searches spike. People who bought the top are staring at a 50% haircut and asking the worst question because they need an explanation that matches their pain. And what happened after that spike? The market stabilized. The selling pressure exhausted, Bitcoin found its footing, and later that same year it pushed to a new all-time high. Not because fear was wrong, fear was real, but fear was late. Fear showed up after the damage was largely done. Now look at 2022. If 2021 was a gut punch, 2022 was a full body slam. The industry got hit with cascading failures, bankruptcies, trust evaporating in real time, and the kind of headlines that make even long-term believers flinch. Bitcoin fell from the prior cycle high down toward the mid-teens. The mood wasn't bear market. The mood was end of an era. And again, right when the market looked the most hopeless, the Bitcoin Zero searches surged. People weren't looking for dip buys. They were looking for confirmation that selling wasn't crazy. And what happened after that surge? That zone became the bottom region of that cycle. The recovery didn't happen in a straight line, but the low was there. The rebuild started there. And the next multi-year rally that led into the 2024-2025 run ultimately had its roots in that moment of maximum disgust. When Bitcoin Zero spikes, it often shows up near maximum retail pain. Not at the top, near the bottom. Near the point where the last emotional sellers are handing their coins to the next buyer. And now we have a third spike in February 2026, with the US printing the highest reading it has ever printed. That sounds like a neon contrarian signal, and it might be. But if you stop here and declare bottom confirmed, you're doing the same lazy thing everyone does with data. You're forcing a story instead of measuring reality. There's a caveat in 2026 that matters more than most people realize. Bitcoin is bigger now. Not just the market cap, the audience, the baseline level of attention, the number of casual owners, ETF headlines, corporate mentions, dinner table conversations, everything is larger. And Google Trends is relative. A 100 today is a peak relative to today's baseline. That baseline is not the 2021 baseline. It's not the 2022 baseline. It's a different world. So the signal is not more absolute searches than ever, therefore the end is near. The signal is relative fear about zero is peaking inside the US attention ecosystem right now. That's still meaningful, but it's different. It means you should treat this as a stress indicator, not a prophecy. Think of it like a smoke alarm. A smoke alarm doesn't tell you the size of the fire. It tells you the conditions are dangerous enough to trigger the system. It tells you the room is changing. And right now, the US room is filling with smoke. Why would the US be spiking while global fear cools? One explanation is simple: narrative environment. Early 2026 in the United States has been a perfect blender of anxiety. Geopolitical headlines that spike risk perception, policy chatter that rattles markets, a risk-off tone in equities that pulls capital away from anything volatile. When stocks wobble, crypto often gets dragged into the same sell risky stuff bucket, especially for newer investors who don't have a framework. Meanwhile, other regions may be processing the same price move under a different media mix, different macro focus, different emotional amplification. Same chart, different psychological weather. And psychology matters because markets are not just numbers. Markets are people pressing buttons. So here's the question you should be asking, and it's the question the data is whispering. Are we watching the final wave of panic or the beginning of a deeper unwind? To answer that, stop looking for certainty and start looking for structure. Here's what retail capitulation usually looks like. It's not one dramatic day. It's a grind. It's weeks of maybe it'll bounce, turning into why isn't it bouncing? Then it turns into it's over. Then it turns into the search query Bitcoin Zero. That's why this term is so useful. It's not just fear, it's existential fear. It's the moment the brain stops searching for how high and starts searching for how low. And existential fear usually arrives late. By the time the average person is Googling the end of the story, the market has often already priced the pain. But often is not always. So let's zoom in on the divergence again, because that's the key twist in this cycle. Global fear peaks earlier, in August 2025, and fades. The world has already been through its emotional spike. The US peaks later, in February 2026, and hits record intensity. This can be interpreted as delayed capitulation, a lagging region finally hitting the wall. And when lagging capitulates, you sometimes get the bottom. Not because America is the whole market, but because the marginal seller matters. If the last group that was still hoping finally gives up, supply floods the market, and then the supply dries up. Selling is not infinite. People run out of coins, they run out of leverage, they run out of patience, they run out of emotional capacity. Markets bottom when the sellers run out. So what do I think happens next? I think we're in the late innings of this correction zone. That does not mean the exact low prints today. It means the risk-reward math is shifting. If you are waiting for a clean, comfortable signal that says all clear, you will almost always get it after the move. That's how markets work. Comfort is expensive. The most uncomfortable moments, the moments when people type Bitcoin 0, are the moments that have historically produced the best long-term entries for patient buyers. Patient, not reckless. That distinction matters because 2026 has layers that 2021 retail didn't have. Institutional flows change the tempo. ETFs change the plumbing. Derivatives change the violence. The market is deeper, but it's also more complex. That means bottoms can be messier. They can take longer. They can have fake-outs that destroy people who try to nail the exact print. So I'm not going to tell you, buy right now with leverage. That's not analysis. That's gambling dressed up as confidence. What I am going to tell you is this. When the US prints record Bitcoin 0 fear, you should pay attention, because it tells you the emotional sell pressure is approaching exhaustion. And if you combine that with the global picture, where fear has already cooled, you get something interesting. You get the possibility that global holders are no longer panicking. They're watching. Some are accumulating. The US is catching up emotionally, and as the US fear wave crests, the marginal selling can fade. That is how bottoms form. Not with fireworks, with boredom after terror. Now, let's talk about what could break this interpretation, because pretending there's no risk is how people get liquidated. If macro conditions deteriorate sharply, think genuine global recession conditions, sustained risk off, or a major liquidity event, Bitcoin can absolutely overshoot to the downside. Bitcoin is still a high beta asset in moments of panic. If everything gets sold, Bitcoin gets sold too. If a crypto-specific shock hits, major exchange failures, sudden regulatory escalations, or a systemic leverage unwind, then sentiment can reset lower, and the Bitcoin 0 search spike can be an early warning rather than a final signal. Signals can fail. They're signals, not guarantees. But even in failure scenarios, the usefulness remains. It tells you fear is high enough to push people into existential thinking. And existential thinking is where cycles turn, either into bottoms or into capitulation that sets the stage for a longer rebuild. And notice something else about this specific phrase. Bitcoin 0 isn't searched by people who are calmly rebalancing a portfolio. It's searched by people who feel trapped. It's the emotional endpoint. It's the mental image of a total wipeout. That's why it has such a clean historical fingerprint. It clusters around the moments when the last weak hands finally stop bargaining and start surrendering. In other words, it's not measuring intelligence, it's measuring pain tolerance. Here's the playbook I personally respect in a market like this. Step 1. Remove the stopwatch. Stop trying to time the exact candle. Step 2. Define levels where you add, not where you panic. Step 3. Size it so you can hold through volatility without flinching. If your position size makes you check the chart every 5 minutes, it's too big. If your plan only works if the market behaves nicely, it's not a plan. Because the market doesn't reward certainty, it rewards preparation. So what's the practical move? The practical move is to stop trying to be a hero with one perfect entry and start behaving like a strategist. If you believe in Bitcoin long-term, the environment of maximum fear is historically where you want to build exposure, not where you want to unload it in emotion. That doesn't mean you ignore risk. It means you choose a method that respects uncertainty. That method is simple. Disciplined accumulation over time. Not a one-shot bet, a process. Dollar cost averaging exists for one reason, because the human brain is terrible at buying when it feels terrible. A system saves you from yourself. If you bought near the top and you're sitting in red, the most dangerous thing you can do is let panic make the decision for you. Panic is a salesman. Panic tells you, sell now so you can sleep. Panic sells relief, and relief is expensive. The people who sold in fear after the 2021 spike missed the next high. The people who sold in fear after the 2022 spike missed the rebuild. Not because anyone knew the bottom, because the data shows fear tends to peak near the end, not the beginning. Now here's the cliffhanger that most people don't think about. If Bitcoin 0 is spiking in the US while global fear cools, what happens when the US fear finally cools too? Because fear doesn't just disappear. It either gets replaced by exhaustion or by curiosity. And curiosity is the first step back toward buying. That's why I'm watching this like a hawk, not because Google Trends is a crystal ball, but because it's one of the few windows we have into real retail psychology at scale. Charts show you price. Google shows you pain. And pain is information. So let me ask you two questions, and I want real answers in the comments because the crowd mindset matters right now. Do you think this US-only panic spike is the final flush before a recovery? Or do you think it's the first warning of a deeper macro-driven leg down? And second, if Bitcoin revisits the $50,000 zone, do you see that as a gift or a sign to run? Drop your take. I read them, and the sentiment shift in the comments often changes before it changes on the chart. Now, a quick reality check before we close. Bitcoin at $60,000 is not Bitcoin at $16,000. The structure of the market is different. The fundamentals in 2026 are stronger than they've ever been. Broader access, larger ownership base, and a supply schedule that doesn't care about your feelings. The 2024 halving already reduced new issuance. None of that gets reversed because the price fell 50%. But the market can still hurt you if you pretend volatility doesn't exist. So here's the clean, honest framing. The Bitcoin Zero search spike is a contrarian stress signal. It has historically appeared near major bottoms. In February 2026, it is flashing the loudest in the United States, while the global trend suggests the rest of the world has already processed its fear. That combination suggests we are closer to the end of this correction than the beginning. Not guaranteed, but probabilistically interesting. If you're here for short-term perfection, this market will humble you. If you're here for long-term positioning, this is the kind of fear zone where history has rewarded patience. And if you're here for emotion, that's exactly what the market is trying to extract from you. One last thing. People love asking, is Bitcoin going to zero? Because it's dramatic. But the smarter question is, how does Bitcoin behave when the public believes the story is over? Because that moment, when belief collapses, is often when the next chapter quietly begins. If you want more breakdowns like this, data first, psychology aware, no hype, subscribe. Keep it tight, stay rational, and don't let a search query write your strategy for you. I'll see you in the next one.